Great. So thanks for the opportunity. Michael and Innocent, are you guys there too? Huh?
I am.
Okay, great. So the three of us will be have put quite a lot of effort together to create this deck of slides, which we would like to take the team through. It's really a look at how does the product that we talk about now, how does Mojaloop really impact on the commercial framework that underpins a mobile financial service. So moving on, if you build it, they will come, right? That's the idea. But the big question is, what will make them stay? Before we get into what's going to make them stay and how the switch environment or how Mojaloop will impact on the commercials, I thought it's important just to put mobile money in a box for everybody. So if we look at this is a very basic view of how the mobile money community or how the mobile money commercial structure is puzzled together. You have customers who come on board through a value proposition that has been marketed to them, either sending money, receiving money, typically buying airtime, paying for goods and services. These services or these products or these value propositions are supported by an agent network, which, as we know, are the big cash in and cash out infrastructure. The agents themselves are driven by a profit story, right? They want to make money, and they're interested in financial inclusion, but more so they're interested in how to make a profit from this new product, which they've been asked to sell effectively or to manage. Through the agent network, we have to make sure that there is depth and reach. So these points of access need to be distributed evenly, have to have depth of distribution in highly populated areas, broadly distributed to reach the rural areas. Through the agent network, you create trust and confidence in the customers to actually make use of the service. Remembering always that the people we are dealing with here that we want to bring on board and facilitate money transfers, we're dealing with their money. People do not commit their money to you unless they trust you. So trust and confidence is everything. And it's fostered through a present agent network where people can see, I can get my money in, and more importantly, I can get my money out. Through that, transactions start to grow, hopefully. People expand the use cases, more customers come on board, expanded value proposition. So this is the typical story. And the reason why I thought it's important to start with this is specifically to focus on, as we go forward, this profit story, which is the driver for the agent network, and the agent network being the center of success of a mobile financial service delivery platform. Michael and Innocent, just jump in if you have anything to add as I'm going through. All right, so over time, the business model and the commercial focus shifts, right? So this is a picture of how interoperability developed within Tanzania, starting with the walled garden. Competition for account ownership is the driver in the beginning, and it's all about how do we onboard, how do you provide access? And the killer application is typically money transfer on us. Moving towards a more connected universe, going to the bilateral agreements, that was roughly 2016. And the philosophy there was scratch my back and I'll scratch yours. You connect with each other, you act as agents for each other to fund each other's wallets, and you facilitate a more effective money transfer across any network. So whoever has acquired you in this first part, you're able to transfer money to anybody on the network or who are connected through the bilaterals. Moving to where we all want to get to, a switch or a hub or a central point of contact, which is focused more on opportunities to spend, and adjacencies is the name of the game. And the killer application is paying for goods and services. An important message while this evolution takes part is remembering always that competition drives innovation in service providers, so that the people who are bringing the services to the market are typically spurred on through competition. Everyone wants to acquire more, everyone wants to deliver more, earn more revenue. So competition is key to expanding financial access, actually. And we should always be mindful of that as we're building new technologies and as new players are coming on board, as new commercial models are being made. Keep the competition alive. Timing is important. Providers have to go through a development effort and cost benefit analysis. This development, is it worth my effort? How much is it going to cost me? What is it going to bring me? And the current business model underpins the success of mobile money. So those are important messages that we need to keep in mind as we start altering the landscape of mobile financial services. This may look very busy, and it is, but just to summarize it, this model is typically what underpins the current infrastructure, and it's also the problem. Where agents were created to establish the cash bridges, or especially in a cash-based economy, the area where a person will go from cash to digital, and they are still incentivized actually to support the cash out on the other end. So when an agent services a deposit, there is zero revenue for the provider, and there's a cost of roughly, these are just rough percentages, there's a percentage of about 0.5% of value cost to the provider. They square up, the provider squares up during the transfer event typically, but the revenue is really made on the cash out. And that still applies to a lot of the models today. And this particular point, that revenue is in cash out, is a stumbling block when you try and move forward to try and drive more value in wallets. But it was also necessary in the very beginning to create that commercial model that would make these guys excited to actually invest some of their money in this product. So the net end-to-end revenue as a percentage of the value deposited, transferred, and withdrawn, roughly is only 1% of the value of that transaction. So it's a very small margin business. And the cash out revenue makes up the bulk of the M&O revenue stream still today. So as we move forward and we have a look at how does a hub or a switch or Mojaloop facilitate the end goal of maintaining digital currency in circulation, or going from cash to digital and keeping it there and broadening the digital use cases, we need to be mindful of what that actually means to people who are earning quite a lot of money at the moment on servicing the cash withdrawal end. And as we go forward now, Michael, well, Innocent will start talking about how do we actually drive these guys, these agents who are also merchants, how do we drive them to not want to only do a cash out, but also allow them to make some money when people spend at a merchant. So
thank you very much, Jacques.
Karibu. Welcome.
Thank you, Jacques. Thank you. So my name is Innocent Ephraim, and I work for Modusbox within the economic development and advocacy. So my job is to talk about what Mojaloop can do to different markets. I am based out of South Africa, and I look after the African market for this mission. Thanks, Jacques, for walking us through the journey of mobile money and how the business models were built to make that success that we're seeing in mobile money space. However, we've seen a number of trends that suggest that there is a need for growth and movement to the next level of providing digital financial services. Now, if you look at Tanzania, for example, only 20% of agents are not also merchants. So basically, most of the agents, and in this case, the agents are those guys who supports cash in, cash out for customers. These individuals also sell goods and services in their stores. And if you look at what they have done to mobile money, they've enabled people to move money from one point to another. And we see business models changing, and users are requesting for more services than only sending money. Now, how can we make the business models to be attractive enough for these merchants, who are also agents, to support digital payments and not only cash in, cash out? Now, Jack has spoken about how these models are complicated and there's not much money to be made there. And to tell you the truth, the interest there is to make money out of the service that they offer. And what we want to see is in their business that they're doing, the retail business that they're doing, how can we facilitate that digitally? And we need to look at the benefits that these stores or these merchants would actually be able to get out of using or facilitating digital payments. Jackie, can you go to the next one? Next slide. Thank you. So why do we want to drive digital merchant payments? I think it's important to understand that both merchants and customers will not only participate because they are told to participate, but there is a need to be solving specific pain points that both users and merchants are having at the moment. So we need to ask ourselves a number of questions. What are the benefits beyond just commissions that we give these agents? They're running a business, they've got stock management issues, they need working capital, they need to be able to pay their employees, they want to be able to get credit if they want to. Why would customers use digital forms to make a payment? We strongly don't believe that a user will go to an agent, deposit cash just to buy goods and services. So the question around that is, how can we make sure that a user has electronic money in their wallet in whatever form, be it in a bank account or mobile money wallet? And what are the cash management issues for merchants? And if you look at all this, these are incentives that will drive the need to pay electronically or the need to accept money electronically. So both merchants and customers need to see value before they actually get to adopt it. And there are a lot of commercial models that we can actually discuss around how can we incentivize these merchants or customers to start getting adoption. If you go to the next one, Jacques. So Jacques has spoken about the model that is currently out there, and the fact that there are a lot of other players that are coming in play. So if you look at the players right now, both mobile money providers, banks, MFIs, we look at these players as digital financial services providers. In other words, they host a wallet for a user. They give a user ability to hold value and use that value. But around it, there are a lot of players that would actually facilitate payment in one way or another. And these are your fintechs, these are your payment initiation service providers, these are your application initiation service providers. And for fintechs, PISPs, and AISPs to have a good play in this ecosystem, there need to be a way to allow them to participate in facilitating transactions for customers. We will look at a number of examples of how these players have facilitated growth of digital payment in a number of countries. But in the middle of all this facilitation, there's a need of a switch. So a hub and spoke kind of service, a Mojaloop, should be able to facilitate the integration of these different players, without forgetting that the regulators, scheme rules, business models are all there to make sure that the whole scheme has there's sanity within the whole scheme, and the ecosystem is key to making sure that the whole model works for everyone. I would go to another one, Jacques. If you look at the examples of these payment initiation service providers in a number of countries, I would actually talk about the likes of Google in India with the Google Pay. They have actually changed the way payment is done. They do not own any wallet. However, they facilitate majority of transactions that are facilitated in that market. A number of other players that you look at are people like Zappa in South Africa. They allow a user to link their card and make a payment in a much easier way. Now, the way we look at this is if all the DFSPs make available or make it possible for service providers to give users a better and easier way, a user-friendly way to make payment, then we are actually facilitating more traction within the ecosystem. Now, the new apps and ways of payments are making it easier for users to spend their money in a safe way, in a secure way, and in a way that gives them comfort. We need to make sure that payment with electronic form is as easy as cash and more secure than cash is. If we go to another one, Jacques. Then finally, I would like to talk about, for me, I would like to talk about what's the merchant dilemma? What is it today? How is the merchant looking at the ecosystem today? And we're looking at a number of services that a merchant is actually interested in. You know, they want banking services. They want to be able to finance their working capital. They want to be able to manage their stock. They want to be able to manage reports and customer management. Now, it has to be clear that none of this can be done by a payment platform or a payment service provider, but these are services that are around what a merchant is doing that makes sense for a merchant to be able to participate in the services that are being offered. And the three main issues that the merchant has, as detailed here, is liquidity management, stock management, and customer management, to mention a few. And these are the things that if these things are solved, a merchant would be more than happy to play or participate in a digital payment platform. And how does all these problems, how do we solve all this problem with a third-party provider and facilitate it with the Mojaloop by connecting all the DFSPs that are providing services in the market, and how we solve the merchant dilemma?
Over to Michael.
Thank you very much, Innocent, and indeed Jacques. For those of you who weren't around on Monday, I'm Michael Richards. I work for Modusbox, and I'm engaged in a number of capacities with the Mojaloop Foundation. And I'm just going to be talking about some of the ways in which we think the merchant landscape will change as part of the implementation of a switch, and some of the ways in which it could change. As both Jacques and Innocent have said, there's a problem at the moment with digital payments to merchants, and that is there's no real incentive for the merchant to accept payment digitally as opposed to accepting payment in cash. At the moment, merchants will typically, in a market where there are a number of mobile money providers, you will see that merchants belong to each one of those. That's a historical survival, typically, and it's meant that merchants will typically have accounts with every mobile money provider. That means they have a significant liquidity problem because they have funds tied up in each of those accounts. They have to spend time and effort moving funds out of one or more of these accounts in order to pay their suppliers, and typically they have many problems if people pay them digitally that they would not have if the same people paid them in cash. So there's no strong incentive at the moment for them to want to accept digital payments, and hence they don't. They need to, because if the customers want to pay in cash, in digital currency, then they need to be able to accept that, otherwise they might lose a sale. But apart from that, there isn't a very strong incentive for them to accept payments in that form. So what's the world going to look like tomorrow? Oh, Back, please, Jacques.
Sorry.
Thank you.
Sorry.
Yes, the world tomorrow. In Mojaloop land, a merchant can move their account to anywhere, any DFSP that belongs to the scheme. They won't lose customers, since the Mojaloop scheme means that customers with any DFSP can pay the merchant using Mojaloop. A single wallet means better cash flow management, better credit scoring, because all of their activity is in relation to a single account. And typically, we would expect that merchants would tend to move, and the larger the merchant, the truer this will be, merchants would tend to move to traditional banks. And that's because traditional banks provide the sorts of services that merchants need. In particular, access to credit, access to loans, access to guarantees of various kinds, all of those sorts of things that typically mobile money systems are prevented by regulation from offering to their customers. So we would expect that merchants who currently belong to one or possibly a number of mobile money systems will start to move towards banking, traditional banks. It's going to make more sense for them to belong there. We hope that those banks will provide an app to allow the merchant to access these services. However, it must be said that most of the evidence so far suggests that one of the things that mobile money systems are very much better at than banks is providing applications that allow people good access to their money. But the other point about this is that, as Innocent has already said, third parties, payment initiation service providers, can now come into the market and provide those services for merchants. So, as I say, we would expect that, other things being equal, we would see merchants moving from mobile money providers to banks. That is, of course, problematic potentially, in the sense that they will, by doing that, possibly lose their revenue from cash in and cash out from the mobile money providers. But that may not be sufficient incentive to keep them with the mobile money providers. Next slide, please, Jacques. So, looking at supply chain management, what might we expect to happen there? Well, we would think probably that large wholesalers could see a benefit in providing apps to allow merchants to order and pay from them, effectively to become PISP players in the market. Problems there are that merchants would need an app from each wholesaler that they use, and essentially we'd wind up with the bilateral problem that we talked about before, except at a higher level, where merchants would need to have an account with each of the wholesalers with whom they dealt. And it would also mean that larger wholesalers would be privileged because they could liquidate the fixed costs of providing an application over more customers, and smaller wholesalers, potentially more innovative entrants to the market, would lose out, which broadly speaking is something we would prefer not to encourage. If, on the other hand, merchants can pay suppliers at the point of order using e-money, both merchants and suppliers benefit. And this will, we would hope, create an appetite among merchants to spend e-money and therefore to receive e-money from their customers, because they will need to build up a sufficient e-money balance to be able to pay their suppliers for the supplies they require. There's also, of course, for the suppliers themselves, a significant benefit in the reduction of the security risk of cash in transit. Now, where people are paying cash for deliveries, then typically the delivery vans, the lorries, the ones who are providing the goods to the stores, will wind up carrying quite large amounts of cash because they will be paid by the merchants for the goods that are being delivered. They will have to deliver that back to the wholesalers eventually. But of course, that makes them the target for the sorts of bad people who have not yet advanced to the point where they're committing digital frauds. They're still committing old style frauds, or robberies as we call them. Okay, so that's that side of things. Let's look at customer management. At the moment, a lot of merchants, particularly a lot of small merchants, have customer accounts, personal accounts. So people will buy on account from a store and they will settle up at the end of the week or the end of the month. Now, ordinarily at the moment, merchants manage those individually in whatever way they can. However, we think that they could gain significant benefits from being able to manage customer accounts digitally instead of using cash. It would save bookkeeping. Customers could be billed directly and reminders could be issued. It would allow the customers to pay directly from their DFSP app. And in fact, account settlement is a form of merchant request to pay. Effectively, what the merchant is saying is, please, Mr. Customer's DFSP, ask your customer to pay his account, whatever that is. And that, as we know from the merchant request to pay use case at the moment, would enable the DFSP to pass directly to the customer a thing saying, please pay Miller's Burgers $50 for all the fine burgers you've been having for lunch this week. And the customer will be able to say that, and they go straight across to Miller's Burgers, accompanied by a message saying, thanks for the burgers, I really enjoyed them. So that, we think, is a potential significant benefit to merchants in customer management. Next slide, please, Jacques. So let's think about how those tools might work. Obviously, new digital tools would be required, but most of that work would not require a very significant amount of change to the Mojaloop application or the Mojaloop switch and its APIs itself. If we looked at what would be required to support supply chain management, well, there's setting up stock inventories, maintaining stock inventories, setting up supplier details, and providing order from supplier facilities. Now, all of that doesn't require any interaction with the Mojaloop system at all. The only thing that requires intervention from the Mojaloop system is pay supplier, where we would expect to see a user of a third-party application to handle stock management, supply chain management, able to say, I want to pay for my order with whoever it might be, Mr. Large Wholesaler, please transfer the funds from my bank to Mr. Large Wholesaler's account. So that would be the standard PISP use case that you saw Lewis and JJ demonstrate so ably earlier today. When we look at customer management, again, there's a new business opportunity. What we required? Well, setting up customer accounts, putting purchases on the slate. Those two things would happen inside the application. Then requesting a customer account is nothing other than a PISP request to pay. And recording customer account payment is nothing other than the PISP bill payment interface. So all of that would be relatively simple to do. It would require small amounts of extension to the PISP use cases, but essentially these are the ones we're already talking about. And they would enable new classes of application to be developed by new entrants to the market, and which would enable merchants to see real benefit in accepting digital payment from their customers rather than cash. Now, next slide, please, Jacques. Thank you. So the question is, how might the merchant services app be provided? Now, those of you who were around on Monday will have heard me talk about the competition space and the cooperation space in terms of Mojaloop switches in the level 1 project. As we know, competition governs accounts and applications, and these are firmly in the apps and to a lesser extent the accounts space. And you remember we talked about how we saw a likelihood that merchants would tend to move across to banks rather than mobile money providers to host their accounts, and that they would certainly reduce the number of accounts that they held. So we would expect to see competition from banks traditional banks, and also, I guess, in response to that, from mobile money providers to provide ways in which they could make it attractive for merchants to hold their accounts with a single provider, i.e. themselves. But more important, there is competition among the applications. We would see significant benefit for new entrants to the market and indeed existing players in the market to provide applications that would enable merchants to really get benefit from the existence of a real-time retail payment switch like Mojaloop to really get significant profit opportunities from the new world. There would also, we think, be very significant opportunities in the market for support. Now, these are the kinds of applications where it's very much more complicated and difficult to set up than it is to administer and run. So we would certainly imagine, for instance, a significant market for local entrepreneurs who could do things like set up an initial stock register for a merchant, set up the connections to various wholesalers that the merchant wanted to deal with, price products, essentially, those sorts of things, connect perhaps to wholesaler applications so that merchants can find out what the cost to them of particular sorts of things are. Once those things are done, the application can more or less run itself. Not entirely, but it's much simpler to run it than it is to set it up. So we would expect, as I say, to see a significant market developing in these environments for new types of support to set up applications of this kind. I'm going to pass over now to
me.
Yeah, Jacques. Sorry, I lost track of who was going to do that slide. But
it's been a long day. Thank you, Michael. Thanks, Innocent. So, in summary, and 5 minutes remaining, we're doing well. The message that we wanted to bring across today was to establish a well-supported single point of connection for all that will create opportunities for existing and new market players and foster acceptance of digital payments through addressing the challenges faced by merchants today. It's important to realize that while we're trying to drive a digital economy, we need to create a reason for the other customer who we're trying to offload this digital cash onto, these guys who are originally incentivized to go back to cash. That's why this is such a difficult nut to crack. So we thought of addressing their big issues, and even if it's a small merchant, these guys have real stock management challenges. This lady has to record in a book who she's giving stock to on a lay-by arrangement, because remembering customers who visit these merchants, they are in a small village, typically are well known to the merchant. So they'll give away stock, they'll give away sugar and milk on a daily basis, and the customer would pay them at the end of the week or end of the month. But that needs to be recorded in a book. So this app that could be provided to them would address stock management digitally. It would provide visibility to lenders who could potentially lend on the basis of the cash velocity going through this particular merchant. In short, if we have a switch which allows easy movement of this merchant from one service provider to the other, as Michael says, banks could come in and onboard these merchants with reduced, simpler KYC or onboarding mechanisms, have a look at their cash flow that's going through on a daily basis and provide them working capital credit. It's a very good reason for this merchant to move away from the business of making money on cash out and move closer to the business of receiving liquidity in e-money payments, which could further his business through cash advancements or working capital. So the other one big point that we wanted to bring out was this about fixed costs can be reduced by maintaining digital value in customer wallets. if we have a longer term goal, which we all do, of how do we reduce the costs of money transfer? Remembering all the way in the beginning of the presentation, there are real fixed costs in terms of commissions to be paid. And those cannot be reduced because agents will simply put money into other more valuable products, like, you know, selling bread, for example, rather than selling e-money, if you reduce those commissions. So you need to stay, and that's a hard cost, but if we have less cash out, there's less commission, less cost to the provider, and therefore those reduction in operating costs could start coming through to customers in terms of reduced transaction fees. So there's a lot of spin-offs to be had if we can drive digital acceptance at retail, and we do that by addressing some of their pain points, and PISPs get the opportunity to provide value-added services and unlock the current barriers that exist to customer access of service. And on that note, Mr. Ephraim.
Thank you, Jacques. Great. So basically, Jacques, thanks for the summary. I would like to just talk about the difference between the deposit points versus the spend points. And if you think about the success that has been seen in a number of countries, that payments or transfers has been successful through mobile money, they actually solved the problem of deposit, changing that money from a physical cash to electronic value. So it's all about getting institutions to facilitate cash in, cash out, get places whereby people can feel comfortable that they can access their electronic value. It's one thing asking the customers to move their money from a physical wallet where they can touch, feel, and see their cash, to some electronic value in their featured phone that does not even have great graphics. Now, it's one thing you being able to use your wallet on a smartphone and be able to see the app and see the statement, versus a person who is using a featured phone that he or she can only access the funds by dialing a short code and getting prompts respond to that. It feels quite distant. And this process has been so successful in a number of markets, allowing people to put money in and transfer money in distance. Now, with all that success, there is a need then to move into how do you start spending that money? And despite the fact that we've got players like PISPs, apps that would facilitate such a transformation, there is a huge need to understand what we actually are getting into. So, you know, allowing third parties to connect into that wallet. You know, simple things like Jacques said earlier, to, you know, make sure that you can actually record your transaction. When a merchant actually write down that they've actually sold to Jacques in credit, and be able to remember to call Jacques. You know, if you can solve that by making sure that it's recorded digitally and an automated SMS reminds Jacques that it's time to pay that debt, because the merchant actually depend on that working capital, it makes a huge difference in this small merchant's life and business in general. So these models are not only on DFSPs, it's you know, DFSPs making sure that they change their commercials, not to facilitate money transfer, but also to facilitate spend. As you know, getting models that would allow minimum cost in transferring money would be very useful, but opening out their services to allow third parties to be able to facilitate business in a secure way is also very important. I would leave it to that.